What's up, everybody? How's everybody feeling today? Got some crushing news to start off with. Not to bring everything on a negative note, but the crypto professor actually couldn't come in today. He called in and asked for me to fill in for him. So what I want to do is really give a sort of overview on what's really been happening this last week. You know, we see a lot of people confused as to what's going on. China's being China. Elon Musk has a Twitter account as usual. Is crypto dying? Oh my goodness, my money is flooding out of my account. I don't know what's happening. It's business as usual, guys. Well, that's really kind of what my message is gonna be today, because I'm really gonna show you guys why I am just laying back and buying more crypto at the end of the day. I feel like I almost have to set a limit on my card right now so I don't max it out buying out all the crypto, because this just looks like a Black Friday sale to me. All right, so are you guys ready for this transition? All right, watch. 3, 2, 1, go. Whoa, oh shoot. Here we go. So what I want to go over today is really the performance of Bitcoin and Ethereum and what they've really been doing, kind of showing you exactly what I see. And you know, it's kind of ridiculous how well these pivotal zones are. When you look at these key levels, they play out perfectly for whenever they come near them, really. This right here, I have it very big and bold. It's called a demand zone. Basically, for people who don't really understand the basis of supply and demand, whenever it comes into this zone, it doesn't like staying in that zone for very long. It will get grabbed up and bought and basically blast off from that zone. You can think of it as the rubber band, or drawing it back in a bow or a slingshot. Whenever it visits that zone, it doesn't stay there for long and it blasts off, usually making new highs. Well, I mean, making new highs within crypto. In other markets, it just likes to get away from that zone. But anyway, just kind of a little quickie on how I got this zone here. I measured the movement from that low to this high, and between these two red lines right here is how I marked it out. This right here is called a Fibonacci retracement tool. I'm not going to get too deep into that, but essentially it measures movements. I measured this point in the market here and that point, because this is really the last point before it really just took off and made its absolute vertical movement, moving out of its trading zone. This is the first of the really big breakout, I would say. And then that is just the peak of the whole movement. So that's why I kind of did that. I'm going to kind of expand this part of the chart. Essentially, on the 4-hour time frame, for a little bit of context why I'm saying this is the 4-hour time frame and why you see 4H in the background, is that each one of these little boxes right here, this little guy that you see right here, this white guy, this white box right here, that is 4 hours worth of price action data. All right, best way I can explain this is, let's look at this guy right here. Actually, you know what, let's go to this one, because this one's actually circled. All right, let's go to this guy right here, and let me go to the 1 hour time frame real quick, and you can see that there's multiple of these bad boys down here within this circle, versus in the 4-hour time frame, where you only see a line and only one of these boxes poke into this circle right here. Essentially, right here is a major point of demand. I've been looking at this, waiting for it to visit this zone for a very long time. This was a flash sale Black Friday. Don't worry if you missed this zone. This is still a prime area of accumulation right here. I would accumulate Bitcoin anywhere within this zone right here still. If it reaches anywhere between 33,800, really just anywhere underneath 33,800, I'm buying. I'm swiping the card and I'm buying on the exchanges. Just to kind of give you a heads up on that, it's not dead. It's holding a key level. It needs to go back down in order to establish support so it can continue going back up, guys. Nothing has ever gone absolutely vertically up. So, you know, just pure logic. Why I say this stuff and why I'm saying it so nonchalantly is because these are the levels that institutional investors look at. When I say institutional investors, I mean like people that are in charge of the balance sheets of humongous financial institutions. Think about Wells Fargo, JP Morgan Chase, Apple. Have you seen the balance sheet of Apple? 1% of their balance sheet is north of $1 billion, which is just like mind-boggling. But when you're playing around with billions of dollars, you really need a prime price so that it could never visit that zone again, because you don't want to lose money. Okay, you're gonna lose your job if you lose, you know, more than $1 million for a company like that over the long term, right? You don't want to be losing millions of dollars for a company. You want to get the best zones, but you know, they can only manipulate a market so much with that amount of volume going into the market. The last thing they want is an average Joe like me or you holding cryptocurrency, you know, before them with better price entries than them. What is the only tool, the only outlet that they have to manipulate us at that point? I'll wait. Oh yeah, that's right, media. Mass media. See, the thing is, the only tool they have in order to manipulate us is fear. That's the only thing they got on us. And guess what? They control the news. They control a lot of what these people, these powerful people that are in charge of a lot of money get to say. So it's funny that Elon Musk tweets at like very key levels. I can almost like time his tweets about crypto off of whenever these prices hit these key levels and see like what it does. If he says something negative at a key level, like this one, it's gonna break downwards. If he says something positive, it's gonna like shoot up. You just gotta pay attention to stuff like this and make sure you're not on the wrong side of things. Like, come on guys, are you guys really gonna think that a new technology like this is just gonna die like that before it gets adopted? Now that we're getting off of Ethereum and Bitcoin, I'm not gonna spend too much time on these price charts just because like they don't really like to mimic each other, but they do really like to rhyme. This is actually an Ethereum price chart on the bottom here, side by side to Bitcoin, but you know, they don't precisely mimic each other, but they do similar things. For example, you know, they go up in pretty much the same amount, same time frame right here. They go down within the same time frame, similar time frames. Boom, boom. You can see this structure was like really one of the only like deviations, major deviations that like really stands out on the eyes. I box it up to make it kind of stand out to you guys' eyes right here. Other than that, business as usual, guys. Perfect time to accumulate, especially for Ethereum right here. That was like the lightning sale, the flash sale right there for Ethereum. Moving on to CoinGecko and seeing really just a lot of red on this page. A lot of red. Really the only things that are green on this page right here are stable coins, right? Compound US dollar tether right here. It's one of the only green ones. We got HUSD, Liquidity USD. All these are stable coins that are built to be $1. So don't think you're going into something crazy here, you know, thinking that I'm in one of the only projects that are only $1 right now, man. I got in so cheap. It's built to be $1. Whenever we look at the 24-hour volume, you can see that the top three over here is Tether, Bitcoin, and Ethereum. Now, you can already see a visualization of what I mean by these things really rhyme with each other. You can see the same exact structure here. And it makes sense that Tether right here is actually the largest in the 24-hour volume. Not only is it one of the most used stable coins on the planet, but essentially a lot of people are experiencing fear right now. And what happens when people experience fear? Well, they want to get out of their volatile tokens and get back into a stable coin. So what will they do? They'll sell it, get Tether instead. They'll swap it out for Tether. And a lot of people who look to get into another like volatile project, they'll get into like Tether or another stablecoin project in order to get into one of these other volatile coin projects like Cardano, like XRP, like Ethereum, like Bitcoin. But like all they're doing is waiting for an optimal entry for those coins. But let's say they already made their money off of a crypto project like Bitcoin, like Ethereum, etc. They get out into one of these projects right here and then wait for that entry, and then they'll swap it out for Cardano or XRP, etc., etc., etc. Nothing really much going on for the 7-day gainers side, especially since pretty much most of everything is down. Quant is pretty much the top thing that's gaining right now. I hadn't heard of it prior to today, but long story short, this project is basically just something that's looking to improve the blockchain. It's got some pretty nice partners. I'd suggest looking it up if you guys want to look more into it. The supply and demand aspect doesn't look too bad. Doesn't have too large of a supply here. 81 bucks. It's got a reasonable market cap right there. You know, look up quant.network if you really want to look more into it, but you can get it off of like major exchanges like Uniswap, Coinbase, and whatnot. But besides that, for the 7-day gainers, I'm not really seeing much. I'm just seeing a whole lot of other stable coins, which kind of makes the perfect amount of sense right now. On the opposite end of the spectrum, you see a lot of good coins actually losing some value right now, like Kusama, like Internet Computer, Aave, Neem, Polkadot, Ontology, Synthetics. I'm not really sad about SafeMoon at all. If you were in SafeMoon before, yeah, you should have gotten out earlier. Zilliqa, Theta Network, VeChain. Yeah, just a whole bunch of solid projects are going down right now, guys, but it's okay. That's a perfect discount for anybody, really. So with that being said, just kind of double back into some DeFi projects as well. Top 3 DeFi projects that are performing right now are Maker, Aave, and Compound. And this is based off of ranking of like how much Ethereum is locked into them. So 2.4 million Ethereum, 1.1 million Ethereum, another 1.1 million Ethereum in that one too. For the record, that's Ethereum tokens, not dollars. That's like north of like $2 billion, a little bit over twice $2 billion. Not something to really be taken lightly. Yeah, you can kind of see right here, the market's kind of reflecting the fear aspect at the moment. The 1-day percentages are looking pretty nice on here, but a lot of red still. Perfect for people looking to get in. So just for the record, I'm probably going to be swiping my card a little bit tonight after seeing some of these entries. Besides that, guys, for people who want to really like get into what am I doing on a day-to-day basis, what are my thoughts on crypto on a day-to-day basis, I'll plug in my Instagram right here. Go ahead and follow it for people who want to see more. I know I only make these episodes on a week-to-week basis, but I appreciate y'all tuning in tonight. And definitely I'll see y'all on the next segment of the MCubed YouTube series. All right, peace out.